Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Today we will take a look at the British pound because actually we have two setups on the forex market that we're tracking. And the first one is on the euro, but euro we discussed yesterday since it was the holiday in the United States and no activity on the market was, so it doesn't need any update. So on the euro currency, just remind you that actually we yesterday discussed that price action that we see here looks bearish, at least technically. And we said that maybe non-farm payrolls release could become the positive driver. These numbers will be poor, but purely technically, if we'll take a look only on the technical side of the current situation, it looks bearish. There's a few moments we have discussed. First, in the reaction on the strong support, it's really very weak, forming on the bearish flag here. As you can see, market gradually starting to turn down, and it also forms a kind of the bearish dynamic pressure, because you can see the trend shows bullish direction, but price action forms lower lows and lower highs, and that's suggesting that here we could get the acceleration. Speaking on today, data that we will get, well, market expects 165,000 new jobs to be created, but again, guys, speaking on the wage inflation, market again expects 3.2%. So every time market expects one decimal point greater than market shows in reality, and every time when the data becomes 1 decimal point worse than expected, market shows the negative reaction. So it's everybody treats it as negative, and so we see some artificial effect in this situation. So we think that whether it will be 3.1 or 3.2, anyway, this is about the 3% wage inflation. It's a good inflation. So what we will see, what we will get today on the non-farm payrolls report. Technically, as I said, the overall situation doesn't encourage us to take long position. Approximately the similar story we have on the cable. So on the cable, recall our recent update. We said that here market is forming a kind of the hand and shoulders, and maybe it will work. In general, we have the long-term bearish view on the cable. Even on the daily chart, from the tactical point of view, you can see that CD leg shows very fast acceleration compared to the AB leg. And usually in such circumstances, you can see actually here was this unstoppable collapse, so no retracements at all within downward action right to the OP target. And in fact, we are not really very interesting how it will happen. If the head and shoulders will work, we will try to go short around 28.72, 29.40, this confidence resistance. Or if the head and shoulders will fail, market starts dropping, that will be the signal that it's time to go short. The downward action, long-term bear trend should continue. Currently, guys, we're closer to the second scenario. Because if you'll take a look at the price action on the cable here and how market responds on some level, in general how it behaves, it looks bearish. So take a look at the follow time frame chart. If you remember, our initial plan suggests getting the ABCD pattern right to the OP, creates the agreement with the 26.911 FIB support, major 618. This is agreement that coincides with the lows of the left arm, and then reestablishing upward action. So that was potentially the point where we should consider taking the long position. But take a look what is going on. Actually, market shows no reaction on this level, dropping lower below it gradually without no response. So this is not the way how market usually turns up. And besides, and you can see here is fast acceleration from time to time. First acceleration, second big candle again. This again acceleration, minor retracement to 30% here. Right at now confidence, agreement support. Take a look. It was the pullback, but it was very small, and market drops now to the downside. So XOP stands 25.33. But when I see such situation, every time I ask the question: if agreement support wasn't able to hold the price action, so that's combination of the OP target with the major 618 support, whether it's a simple XOP just an extension. Near the bottom, we're able to keep the market. So currently, market stand one step to the failure of the hand shorters pattern. So if you're not ready yet for taking the short position, you could wait a bit more and get the final confirmation. But I would say that this kind of price behavior, right at the point where the bottom of the right arm should be formed, it looks bearish. So it should not be in a normal situation, especially when you see this kind of action to the upside. When you see absolutely normal head of the pattern. So good thrust down, good thrust up. It's very good head. But the things that we have right now mostly hints on the possible downward continuation. So that's our view on the cable as well. On the hourly chart, guys, our hand shoulders that we also discussed here has worked very nice. So it has started from the 3 drive. This was the first hour trade. This was perfect 3 drive sell. Market collapsed. Then it turns to the hand shoulders, and we said that's the pattern that you could keep an eye on, this AB CD equal target. So this was an OP, and indeed some reaction has happened, as you can see, but it was very small, and then downward acceleration has followed. Now market, this is, guys, definitely not the way how market usually turns up. This is some kind of the very choppy and sloppy consolidation, sideways action that mostly suggests downside acceleration. So that's what we see right now, at least from the technical point of view. Well, maybe non-farm payrolls will change the situation, but currently overall situation as on the euro, as on the Great British Pound, looks bearish and absolutely doesn't intrigue us to take any long position currently.